Good morning, everybody. Today's Tuesday, 8:23 a.m. Eastern Time, February 6th. So just let's review what I wrote yesterday in the market structure documents and compare what we have in the book right now. Okay. So according to the DX and GX, both went up, not significantly. So I expect above 47%, but just only jump 0.2%, and the GX jumped 300 millions. So not significantly, but dealers was willing to buy yesterday. Of course, we are in a positive gamma. They buy weakness, sell rallies. The MOC yesterday was around like $2 billion. So, and they bought a market close above 4,940. That, as I told you guys on Sunday, right? The market structure document, that's supposed to be the buyable region. But as I highlighted in the market wrap yesterday, this one that I'm just showing, they decided to bring up to 4,918. So according to the book, put contracts still posting, still printing higher implied volatility compared with the call contracts. So means more premium, means also, sell premium, buy cheaper things, force a gamma squeeze. That's the setup. We are nearby the VIX expiration. The VIX expiration is tomorrow. So you guys always see in the week of the VIX expiration a spike in the VIX and some turmoil in the market. Not turmoil, but some red days. Because what dealers have been doing since the COVID, they have been suppressing volatility and forcing markets going up. So every VIX expiration, we see red days, spike in VIX, that where they short volatility. They never short bottom, they short top. They allow the volatility spike because that you see higher, especially higher implied volatility in put contracts, force the VIX is going also up, they sell premium, right? They sell premium, this is the pattern. Okay? So what was the summary that I wrote in the market wrap? So they remove a little bit the acceleration, not something significantly, but they remove it, right? Because the GX jumped 300 millions. Let me put back in this screen. So it's a possibility to see markets is walking sideways. The majority of the gamma that you have nowadays expire next week. Okay, so the book also shows us like a very tight market, like a book that's more safe to sell premium than to go all in, right? Because the implied volatility, high implied volatility, especially the put contracts. So consequently, I told you guys that we could see markets trading between 4,940 and 4,960. We saw yesterday, a rejection at 4,955. I also highlighted in the closed group above 4,950. Don't be short. Expect a rally. Expect, a spike. Expect a gamma squeeze. But looks like that dealers sold premium. They were not positioning at 4,950, right? Because when you backtest 55, you reject and you went back to 4,940, right? Closing at 4,942, where the buyer is supposed to be seated. Again, these buyers tend to be seated at 4,940. Worst case scenario, same level as yesterday. Just check the book. It's where we start to see basically no gamma and higher negative delta. So buy weakness, sell rallies, positive gamma environment. Okay? So economic data today. The economic data today, for me, in my humble opinion, will not move the market. Okay? We have only the red book soon. But something that we need to pay attention is the Federal Reserve speakers. we have a bunch of speakers today. One at 12, another one at 1, another one at 2 p.m. Okay? And also tomorrow, let's go tomorrow. So this week is more highlighted for the Federal Reserve speakers, than, basically economic data. You don't have, economic data that, can move the market, right? So tomorrow we have basically usage, important sports, our trade balance, but I guess also we have more Fed. Yes, you have more FONC member speaker, 11:30, 12:30, 2 p.m. So we have a bunch of Federal Reserve speaker this week. Okay, so maybe they will move the market. Because economic data, I'm not seeing anything in the economic data that move the market. Anyway, next week we have PPI or CPI. I mean, you have inflation that is supposed to be broadcast on Tuesday. Let me see, Tuesday. Yeah, core CPI. Usually core CPI that's move the market, especially move 10 years yield, DXY, and consequently risk assets. So a market sideways this week with higher implied volatility, spike in volatility, and also spiking in 10 years yield and DXY, could you be a setup for dealers to buy cheaper and sell higher? What I mean sell higher? Spike in DXY, dollar. If they want to short the dollar, they want to short at the top, not at the bottom. If they want to buy risk assets, they will buy at the bottom, not the top. If they want to suppress volatility, they will suppress at the top, not at the bottom. You guys gotcha? If they want to buy bonds, they will buy bottom, not the top. So means TNX is going up, right? Anyway, we already reviewed the market structure. So we also have some earnings that will be broadcasted today. Some before opening, others after close. But are very important companies, but are companies that not have too much weight nowadays in S&P 500 because we don't have any Magnificent 7 report earnings this week. They already report. You guys have been seeing NVIDIA, Microsoft, and etc. I guess the only one that's not going up anymore is Tesla, right? So the Magnificent 7, now I guess Magnificent 4 or 5. Some is already going down, like Tesla and Apple. Okay, that's an important earning week. Could you move the market? Not as when you have Magnificent 7, because the weight that they have in the S&P 500. Okay, so again, the setup that I'm looking for is much more a sideways market. Buy the dip because in a positive gamma environment should much probably see a lower CPI next week, and then we will see a spike, especially because we have a lot of gamma to expire next week. So consequently, if you see a sideways market this week, a lot of premium will be burned. Okay, so now let's compare what I wrote yesterday with the current book. The delta flow is still bullish, still positive. As you can see in the spreadsheet, 4,940 is still being the buyable region. Worst case scenario 4,920. A huge gamma at 4,950 that is also acting as a resistance. We saw yesterday a rejection at 4,955, right? So I'm seeing 4,950, 4,955, that region over here, right, as an inflection point to going up. Major delta resistance is still 4,907. Before the drop yesterday, 4,960 was the level that brings higher delta flow, right? But all the premium at 4,960, as you can see, is already burned. All the call deltas was already burned, because the meltdown yesterday at the close. Okay, so I'm still looking for 4,940 be the Bible. Worst case scenario, 4,920. Inflection point for the upside, 1555, that region. We could see a rejection over here, going back to 40, burning all those deltas, okay? Burning all those deltas, and then, market could spike back up, okay? Positive gamma. Buy weakness, sell rallies. So far, is strange over here in 70. We need to see deltas being burned, a flow going down to, squeeze to the upside. Okay, guys? Get it? For me, the pattern, the book, my read, my interpretation is the same as yesterday. We have a lot of premiums to be burned at the table, especially in put contracts, because the implied volatility is much higher than call contracts. Okay, it's much more easy to finance your sell premium, buying cheaper. Okay, worst case scenario for me is 4,900. Is where the gamma flip to negative territory. Okay, if they want to dump to back test, for example, let me bring now the graphic to the screen. If they want to dump to EMA 20, for example, I don't think we'll go. So far, we don't have flow to bring us at 4,852. I see flow only up to close this gap and back test this pivot at 4,906. I'm seeing negative flow, bearish flow up to here. So for me, worst case scenario is 4,905. I also highlighted yesterday, somebody's trying to bring market up to 4,905. That's the flow that I have been seeing. So far I didn't see any flow to bring us below 4,900. Okay. Going back to what I said regarding buy low, sell high. Let's look for DXY. Of course, the DXY is still in trend, right? It's still in uptrend. The inflection point of the DXY is 104,699. If you break over here, we will start to see market enter in a risk off environment. Okay, this is the inflection point, 104,699. If you see now dollar accumulating here or distribution here, is something that I expect, and then I expect a lower CPI next week to see a dump in the dollar. Okay, same thing regarding the TNX. I always expect a small candle yesterday and to see abandon baby, but so far we don't have abandon baby, but you have a big gap, right? Same thing, if they want to buy TLT bonds, they want to bring this really up. Okay, they really want to bring this really up to buy cheaper bonds. Okay, so you guys understand that how I'm trying to connect the piece. We have a gap to be closed right now. Consequently, if you close the gap and continue the down movement, the TLT, the bonds tend to spike. Now the bonds tend to be bottom. So CPI calm, we will see the close the gap and maybe a continued movement to the downside, going back to 3 region, 3.9, 3.8, or even to lose that bottom at 3.8. Okay. Consequently, what's going to happen? Market will enter in a risk on mode again. So dealers will buy bottom because this week so far is bottom, right? We saw a back test at 4,918 yesterday, and you saw dealers coming in buying. They did the DX didn't spike but jumped 0.2%, means that dealers bought. Okay, and the GX also went up. They start to remove acceleration. Okay, so that's the puzzle that I'm looking for, and I'm trying to connect the pieces. Regarding Bitcoin, regarding Mara, I'm seeing a lot of accumulation over here. I'm not seeing distribution. Because if you check in this 1 hour graph, you guys can see, some in a daily graph as well. You guys have been seeing, the Bitcoin have been back test some intraday pivots, pivot, and then spike up. Also, they create, a downtrend pivot, we back test going back down and test the pivot and going back up. And, it's not going anywhere. For me, it looks like more accumulation than a distribution, especially because the volume is not too high. Okay, the volume is not too high. If you guys check by daily graph, this guy is the pivot over here, close at 41,814. As you can see, market, Bitcoin have been back in test this pivot and going up, right? And going up. In another hand, at 43,700 is an intraday pivot, we back in test there and going down. If you check the tricks, look at the tricks. The tricks already lost the downtrend angle. It's trying to be back to positive region, right? And also the DMIs and the ADX, since we went, from a big drop from 49 up to 38, as you guys can see now, after the creation of the pivot, the DX dropped and the DMI is almost building a line. They want to start to do a bullish enlace, like here, when the DMI plus enlace the DMI minus, right? Like this. So looks like, the ADX and DMI want to give us a buy sign as well, like the tricks. MACD is still bullish, right? Still bullish. Didn't form the enlace, the bearish enlace so far. What could be happy, that's what I'm looking for, is to became a line and then the blue line open up again. Okay, look, the bullish band is really squeezed. It's really squeezed. Bitcoin is almost ready to a big movement. In my reach, to be going up. Okay, to be going up, especially because of the indicators. So if I'm correct, I'm also correct about the TNX and the DXY. We will not break up the inflection point. We will close the gap instead of to going back test 4.3. Okay, guys, I'm done by now. As I said, just to review, I'm expect a sideways market, possibility to spike in volatility, especially tomorrow. 4,950, 4,955, that's the inflection point. We could keep seeing a rejection in the level. 4,940 tends to be the Bible. If you break 4,920, worst case scenario, anytime this week, I'm not seeing that level today, 4,905. Guys, take care.